Welcome back to We Talk Money. Today we've got a packed show. We've got a lot of drama happening at the Tesla company. We've got Bitcoin that's pulling back, but still close to all-time highs. Got the ETH ETF approval, kind of some follow-up on that. We have a God candle in a stock that Nikki's been trading. We have, crypto scammers stepping up their, celebrity endorsements. Is that a top signal? And we've got an absolute ton of questions from you guys today. So, Nikki, let's start with you. What is this God candle that we're seeing in the stock market right now?
It's a very unexpected stock, Abercrombie and Fitch. So it's really fun when you have a thesis, and it takes a couple years for it to play out, but it's really fun when you finally see your thesis play out. And that's what's happened with Abercrombie and Fitch. So years ago, I was back in 2017, 2016, I started to notice that Abercrombie and Fitch was trying to turn around their brand. Everybody knows the old Abercrombie with the smelly stores full of cologne that's going to choke you, and the dark stores. You were cool if you had Abercrombie clothes when we were younger. It was a vibe. And then everyone hated Abercrombie for many years after they had a fall from grace, essentially. And I noticed that they were starting to change their merchandise. They were trying to change the brand. They got a new CEO that wanted to completely revamp the whole brand and bring it back to life. And holy moly, she did it. And it's paying off in terms of an investment. It's been something I've been invested in for a while now, and people probably thought I was crazy when I bought it, but now look at it. It's crazy.
Yeah, retail seems to be your space. And I think you're up, a 12x on it now?
Yeah, I actually took some profits today at a 12x on this thing, which is pretty wild. I think.
So you mean you can make money outside of crypto too? What's that about?
But look, it takes time, right? This took time and patience for me to sit through. I was buying it even during COVID when it was selling off, because everything was selling off, and I was even buying it then. Buying retail during COVID, the depths of it was probably a scary thing to do, but it ended up, it's now the talk of the town. Everyone's talking about it, and I'm just laughing. I'm just like,
I'm looking at a tweet of yours from June of 2019, and the tweet says, "Here's a contrarian thought. I think ANF isn't getting enough credit for the dumps they pulled the Abercrombie brand out of." So, yeah, I think a lot of people are tweeting about it now saying, "Oh, this brand has turned around and they're making cool clothes again." Where were you 4 or 5 years ago when She Talks Finance was on top of this at
Yep.
I think low, like a $10 or $15 cost basis, and
yeah.
today it's pushing 190. So
Yeah, this candlestick that we're seeing today after the earnings report is madness. For this to be I'm looking at this thinking this can't be real. Is this a crypto chart? Is this a semiconductor? What is this?
Yeah, anybody that was short is absolutely getting squeezed today, and people chasing this. Ooh, it could keep going, but it's also risky, kind of going parabolic here.
I do want to give everybody my thought on this too. This was part of my idea when I was investing. It was highly shorted. So the short interest kind of helped along the move as well. So when you have fundamentals improving mixed with a high short interest, man, this is this kind of stuff that can happen.
Yeah.
So
And that's what we love to do, is hunt for things that are unloved, that are either going to be turnaround stories, or, stories like Bitcoin, an asset class that's underappreciated, or, price charts that are basically beat to death that have really favorable upside potential.
yeah, interesting stuff.
Yeah. You know what's not getting much love this year so far is Tesla. Trav, what the hell is going on with Tesla, and what's happening with, Elon's pay package, and how is this going to play out?
yeah, Tesla's still one of the worst performing stocks in the S&P 500 so far this year. It's had a little bounce recently, but a lot of drama. Real shocker there, right? Tesla and Elon and drama. That's that's just a classic time tested relationship right there, is Tesla and drama. But yeah, there's a big vote coming up in a couple weeks here. I believe in the second week of June. Tesla shareholders are going to vote to either approve the Elon's compensation package that they actually had approved back in, I believe it was 2016 or 2017. That pay package was struck down by a Delaware court because it was ruled that that pay package didn't go through a proper vote back then, because it was there were some improper ways that Tesla went about actually presenting that compensation package to shareholders. So some shareholders had sued, and in the Delaware court, the court had decided that the shareholders needed to vote on that package again. So Elon, he's been pushing, Tesla has been pushing shareholders to vote for this package. He's indicated that he might walk away from the company if this package isn't approved. I don't know if he'd actually do that given his legacy with Tesla, but, a lot rides on this vote about whether this compensation package will be approved, because Elon has been starting all these other companies, whether it's SpaceX or, even new ones like XAI, which just raised like $6 billion this past week at a very high valuation. He's certainly got some places he can spend his energy. And so if the compensation package is voted down, which is a possibility, that could lead to Elon having less of a role at Tesla, which would probably hurt Tesla in the short term for sure. So very, very interesting. A lot of the retail shareholders, of course, are in favor of approving the package, but there are some larger institutional shareholders that could really swing the vote. ETF holders like Vanguard and BlackRock and Fidelity. We don't exactly know how all of those are going to vote yet. Last time around, BlackRock voted in favor, but Vanguard voted not in favor. So we'll see if anything's changed there. It's going to be very, very interesting. So expect volatility on Tesla stock in June around that vote. And I'm just going to be sitting here eating popcorn and watching it all play out.
Yeah, what a weird thing that would be if he actually left Tesla and then the stock cratered and he's like, you know what, I'm just going to work on AI and I raised $6 billion over here.
Mm-hmm.
Yeah, what a strange situation.
Yeah. And I think, it's one of the things that makes the package interesting is that, he was heavily incentivized with stock, which I'm generally in favor of as a stock investor. I like my executive team to have skin in the game, to have the incentive that to create value in the shares. And he did that, to his credit, whether or not, maybe we could make arguments that he oversold FSD and he made promises about the Roadster and the Semi, which never came true. But if you're looking purely at stock price and stock price performance, even though the stock's down this year, it's still up a ton. It's still up, 5 or 6x from when that compensation package was initially approved. And so, it's hard to argue that he doesn't deserve some significant form of compensation for doing that and for spending, a lot of his efforts at Tesla over the past decade. So I do think, there's some level of stock compensation that he's entitled to. And I guess the question comes down to how much dilution would you be willing to suffer as a shareholder to have him at the helm and have him continue to try to build value at Tesla? And that's a question I think you have to answer for yourself as a shareholder.
Yeah, I know it's been one of the hottest contested stocks. You either hate it or love it. And, it's just been a kind of a want flop so far this year. But what has not been a flop so far in 2024 is Ethereum. And taking a look after the ETF approval, we had a bit of what I call a flying middle finger uppercut candle to shorts here on May 20th, where it was up about 19 or 20% in a day, or over $590 per token in a single day. And I know we got a bunch of questions on Bitcoin price and ETH price. And so we'll do some TA here in a second. But this is definitely one of the more, I guess, like bullish cryptos of May. This was underperforming Bitcoin quite a bit over the past year. And, on this rebound is now testing 2024 highs. And if you zoom out, take a look at ETH, it's actually still in a much longer term bull market after it broke out. And as everybody in the community knows, I was buying this down in the 2000 range, scaled out a little bit at like a 40 or 50% gain, but I'm still holding the lion's share of this position and just waiting for a 4K break. Next major zone is going to be around 4,800. So just keeping our eye on that. And we've also been in this kind of weird kind of meme situation where it's like meme cryptos have been having a lot of alpha over Bitcoin over the past month, but we've also seen a lot of scams. The biggest one being the Caitlyn Jenner crypto scam.
Is this
Uh,
true?
I believe it is. I put out a reaction video on my YouTube channel, and you had Jenner, Caitlyn, whatever, basically saying that they're super excited and this is a big, I don't know, just basically a pump and dump. And I went on to mention how Kim Kardashian got sued by the SEC for a similar pump and dump of, it was called ETH Max. It's basically an Ethereum copycat that was a clear pump and dump, and she made at least hundreds of thousands, potentially millions, scamming unsuspecting people out of their money. And so her and Floyd Mayweather got sued. And it seems like these celebrities never learn. And this can be kind of a top indicator whenever we start to see celebs pumping shit coins. They're really just doing like these kind of cheap money grabs. And I think that's exactly what this is. So yeah, I don't know. This is just gross. I hate seeing it. You know, people that follow up and buy this crap, you know, they're the ones that lose money. And yeah, this is the video that I reacted to. Jenner says, no deep fakes, all real crypto, over 100 million in volume in 4 hours. You know, some of that volume, or a large majority, is probably wash trading or fake. But yeah, people make a lot and most people lose a lot in these types of scams. So just be careful. Don't chase this crap. That's exactly what it is. Most of these go to zero very quickly.
Can we chart can we chart that coin, or is that not even a chartable coin yet?
Yeah.
Like,
There's
is it on an exchange?
Yeah, you can see.
Got DeFi, baby.
Yep. This is an hourly chart, which is, you know, it's basically a chop fest.
Shut up.
Yeah. So nothing too
Oh my God.
nothing too compelling here. For you guys listening on the pod, it's basically just choppy. I mean, so some of these actually do catch legs, but you know, a meme coin based around a celebrity, it's like they're not even trying anymore. Before it was like they would make some kind of fake, like, oh, we're going to change the world with XYZ. Now it's just like, yeah, this is a meme coin. Please buy it. So, and people do. And look, I mean, there have been some meme coins over the past couple of weeks that have been breaking out, and it's a game of hot potato. So, you know, you've got stuff like this dog with hat, you know, that when you zoom out and look at a daily chart, it has had like bullish price action. Pepe, you know, so I've just got a couple in this small watch list. And so, yeah, I mean, you can make money trading meme coins. You've just got to be quicker on the trigger and very disciplined, because most, if not all of these, are going to zero. And the only question is how long will the bull markets stay intact for these things? And it doesn't take much for them to get rugged or to have an insider, you know, just market sell a whole bunch and see these things down like 50 or 60% in a single day. So that's why I like to bias towards quality, like Bitcoin and ETH and things that have, you know, just high liquidity, which, you know, some of these meme coins are trading hundreds of millions of dollars of liquidity. So that's really not the problem. It's more so like whales just dumping on the market and causing a waterfall of selling. And next thing you know, you thought you were up 500% and then you're back to break even like that in a couple of hours. So that's why I call it like a game of hot potato, because these things don't have utility. They're not going to last over the long term. You got to be in and out.
Like a sniper.
Yep. Yeah. And go ahead, Trev.
I can attest. I have become something of a shitcoin trader myself recently. And I have been rugged several times.
Really? Which one have you gotten rugged on?
Oh, I can't even say the names on here.
You are that degenerate, huh?
Wow.
I'm embarrassed. Well, no, and I mean, I own some. I actually did make some okay returns on some of the bigger ones, like Bowden. You know, Bowden and actually GameStop coin pumped along with the stock a couple weeks back, or 2 weeks back now, and I took pretty quick profits on that one. So that was basically pure luck. But yeah, I've had some wins. I think I'm actually up overall right now in the bull market, but I think I would have been better off probably putting that time and effort elsewhere. to be honest.
Yeah, I mean that's why I've been biased towards Bitcoin, because if you run the data, over 80 something percent of crypto tokens are down over compared to Bitcoin over a month, and even more over a year. So there are some diamonds in the rough that are showing alpha over Bitcoin, but most of them are not. And I've been beating that drum for over a year, and that's why Bitcoin dominance is up. And that's why, a lot of things have just been bleeding out to Bitcoin. But let's go ahead and actually just do some TA. So right now we're actually getting ready to have a little bit of a quote unquote golden cross on Bitcoin, where the 100 period is about to cross above the 50 period moving average. And it looks like we have a much larger, let me get a clean chart here, a much larger cup and handle type formation. So we had a pullback after the halving, tested the 100 period moving average. And to me, this is still looking bullish. And this is what I consider a phase 2 market environment, where we're still in an upside trending market. That could end at any moment. But as far as the price action is concerned, it looks like we're still just in a clean run retracement extension type market environment. And also, I mean, there is still a lot of correlation with Bitcoin and stocks. And you can see stocks sitting at all-time highs, thanks to, I guess, solely NVIDIA, right? What happened with NVIDIA
yeah.
week? Look, gap and run, and then another gap and run. Is this thing solely holding up the stock market?
Some people would say that it is. I mean, certainly the semiconductors over the past, 6 to 12 months have been the strongest sector in the market. And that was definitely true last week as well. We had actually the broad market down last week, but semiconductors and NVIDIA were up. It was funny. We were posting, that the classic heat map charts last Friday. The entire market was red except for NVIDIA and 2 other stocks in the S&P 500. Was pretty funny. Yeah.
Abercrombie was probably one of the green ones.
Yep. But, NVIDIA, to their credit, they smashed the earnings estimates. Expectations just keep rising. We wrote about how expectations are sky high for NVIDIA, but they are still beating the sky high expectations, and they still raise guidance, and they're still growing at a rapid rate. Now, I think in a couple quarters, that story may not be true. Expectations will eventually get too strong, and people will be trying to make money on the NVIDIA quarter, maybe next quarter, maybe quarter after. And it's going to be, they're going to just meet expectations, and the stock will probably sell off. But, overall, I think the actual company's performance is impressive. The stock price is probably a little bit ahead of itself, but it's also been, absolutely impressive. It's the second largest market cap in the world now. Or actually, I'm sorry, it's the third largest, but it's like 5% behind Apple for the number 2 spot. So I could see it catching Apple probably this summer at some point. But yeah, it's quite the story. And frankly, it's kind of wild, because it's not like it's trading at a nosebleed valuation. If you're looking at next year's earnings estimates, it's only trading for 30 times next year's earnings estimates. So there is an argument to be made that at some point there's going to be a pullback in demand for these chips, and that, earnings will decline in the short term. And so it may be a little bit more expensive than it seems. But, nonetheless, it's not like it's trading for 50, 60, 80, 100 times earnings. I mean, Tesla's still trading for 50 times this year's earnings. And so there are more expensive large cap tech stocks out there than NVIDIA, believe it or not.
So for anybody who hasn't been paying attention to the AI narrative, why is NVIDIA up so much? What's happening, and why are investors just going ape shit for this stock? What's driving this?
Yeah, so there's obviously just a huge boom in the demand for AI chips and for AI servers. And so NVIDIA's financials, I mean, they're quite shocking to see. I mean, EPS is up 400% year over year. Revenues are up, hundreds of percent over the past year or so. And so, it's totally exploded. I mean, they're doing $26 billion a quarter of revenue. They were doing less than $4 billion of revenue a quarter just a year and a half ago. So, I mean, the growth has been tremendous in the actual business. NVIDIA themselves called out a ton of customers in this past earnings call. And so, I saw conspiracy theories on Twitter 6 or 9 months ago. And it was just so funny to see, because they were saying, oh, it's CoreWeave. It's this company that NVIDIA invested in is buying all these chips from NVIDIA. It's no, go listen to the earnings call of Meta and Microsoft and Google and Amazon and Apple and everyone else, they're all buying chips in addition to these new startups that are creating their own data centers to house these chips, in addition to all of the AI startups that are creating applications, in addition to the companies that are building new AI models like Anthropic and Mistral and all these other companies. In addition to now countries are getting involved. There's, the Swiss government is building a new supercomputer that's built on NVIDIA chips. Same thing in Japan, same thing in Singapore. The US, of course, is trying to build out some of that capacity as well. And so there's just a tremendous amount of demand for NVIDIA's product, which is basically the product if you want to build LLMs and other AI models that are hot right now. And so, I do think there's probably a lot of front loading of demand, but right now it's very clear that the money is flowing, and you can see that also in the CapEx budgets of big tech firms. XAI, which we just talked about, Elon just raised $6 billion, and a significant amount of that is going to go to NVIDIA. So it's just a tremendous amount of demand worldwide for these products.
You know what freaks me out is whenever I start to see articles like this, NVIDIA rivals gold as a shield against inflation.
Yeah.
Boy, that is a hell of a statement to make.
It is.
Yeah, we do have to be careful. I mean, I would definitely caution investors out there not to get carried away here at a bubble top, because as good as NVIDIA's results are, remember what happened to Zoom back in the pandemic. Remember what happened to Cisco back in the 2000 .com boom. These are businesses that went through big boom times as well. And then eventually things are going to normalize. And so you can't get carried away. You can't be buying this at the top when it's going parabolic. NVIDIA is doing a 10-for-1 stock split. And so people think that it's going to split and all of a sudden it's going to be back up to $1,000 a share again. It's going to 10x in a matter of a year. I don't think that's going to happen. So just be careful out there if you're buying a stock that's already up 250% in the past year.
Yeah.
Chris, I did want to say, to your point of, you were joking, obviously, if NVIDIA is holding up the market, but I'm kind of surprised the Magnificent Seven is really looking good still. Like, if you look at Apple and Google and Amazon, like a lot of these charts are, and NVIDIA, obviously, like a lot of the Mag 7 is back to all-time highs or close to all-time highs or making new all-time highs. So that's an interesting note.
Yeah. And if you look at, just small cap, so taking a look at the Russell 2000, it's still over 15% below all-time highs, where the S&P and NASDAQ, which are large cap in tech, are at all-time highs.
Yeah.
So yeah, I think that demonstrates that, big companies in tech are still dominating, kind of like Bitcoin.
Yeah, and of course, interest rates will have an impact on what small caps do. So if interest rates do go down, I think small caps could rally.
Yep.
And so that's very impactful for the small caps.
Yeah. And, we're getting we're within 6 months of the election, which is turning out to be kind of an interesting thing. I think we talked about this last show, how, Bitcoin is becoming a major talking point for the election, for better or worse. It's becoming a very partisan issue, where, Elizabeth Warren was taking the anti-crypto army take, and for some reason she thought she was pandering to people. And then now you've got Trump, which is coming out very, very pro Bitcoin, which actually right now I think they are deliberating on his New York case, which we can talk about. But one thing that he came out and was saying in a speech the other day was how he's going to release Ross Ulbright, who was sentenced to life in prison back in the Silk Road days, which I have my opinions about it. But Trump came out and said, hey, enough is enough. If I'm elected, we're going to release him. We're going to ban CBDCs. So he is very much pandering to the pro Bitcoin and crypto crowds. I wonder how much he actually understands, and if it's something he's put a lot of thought into, or if it's like, hey, if we just say these things, we can get this base of people behind us.
You don't think it's the latter? You don't think it's like his cronies talking to him, being like, hey, these crypto people, man, we need to get them on our side?
I mean, I don't know. We'll see.
I don't know.
Yeah.
Maybe.
But it's just interesting that Bitcoin is becoming such a hot topic for the election. And could this be the first Bitcoin election? So we shall see.
Yeah.
But we actually have a ton of questions from you guys, so I can go ahead and pull those up. If you guys have anything else you want to talk about in the meantime, feel free to mention it. Otherwise, I'll pull these questions. Let's see here. So first question is from Craig. With the growing adoption of Bitcoin in significant ways, it's becoming harder to find another investment opportunity that rivals Bitcoin's asymmetric risk-adjusted returns. It seems like buying as much Bitcoin as possible is the best approach for mid and long-term returns. Obviously, everybody has different financial situation, but is there anything else worth investing in other than Bitcoin? So I think this is, and look, I think Craig framed this pretty reasonably. I mean, this is the bull case for Bitcoin, right? And, we have over a decade now of really, really high risk adjusted returns. But something to keep in mind is that, the old disclaimer is past performance doesn't predict future performance. And there's a reason for that, because it's true, and people that look at the past or look to the future based on the past, sometimes it works, sometimes it doesn't. Yes, I'm bullish. Yes, I have a lot of Bitcoin in my portfolio. Sometimes an uncomfortable amount of my net worth is in Bitcoin. And I just know what those limits are for me. But I also don't believe there is a 100% guaranteed chance that Bitcoin stays the best performing asset on the planet for decades to come. I think there's a pretty good shot, but I'm also hedging against that. And I also want to own other assets like profitable companies and land, right? Valuable property, things like that. So I like to diversify, but I agree. My goal is to accumulate as many sats as possible and keep a low cost basis and also trade the market cycles. What do you guys want to add to that? Is there, how do you view the market currently in light of everything and find interest in investing in anything other than Bitcoin?
I do want to say something on this, because there are two major arguments that are going on right now with people constructing portfolios, arguments within financial advisory, all of that. One is people have seen big tech work, large cap work in the stock market, so that's all they want to invest in. They don't want to invest in small caps. They don't want to go international, all of that. They've seen it work recently, and that's what they're doing. That's the first one. The second one is exactly the question that Craig has posed here, that where is another opportunity that is as good in terms of risk-adjusted returns other than Bitcoin? And so a lot of people need to be careful here on both of those arguments, right? Because they kind of are one and the same in a way. And the fact of the matter is, we know that crypto is very volatile. We know that Bitcoin is very volatile. You can go all in Bitcoin, but you're going to probably have a lot of gray hairs and it might not fit your risk tolerance at all. So I think that instead of thinking about it in terms of, yes, it's a good opportunity, but always think about how to manage your position size to align with your financial life, your risk tolerance, your risk capacity, and your goals. And it's like, I do know people that are basically all in on Bitcoin. I mean, that's the only thing that they have. And they feel very strongly about it and they accept the risks. But when I think about those people that I know that do that with their risk capacity and their age and things like that, there are conversations that need to be had that are like, hey, we have these risks that we need to look out for. So I really do think that, yes, it's hard to argue against both large caps and Bitcoin right now as opportunities and people wanting to be over allocated there. But at the same time, I think that it's easy for people to forget the hard times that we've gone through in risk assets, especially Bitcoin, especially. It's easy to forget when you're at all-time highs and when prices trended, but we've been in the trenches with Bitcoin since the beginning of time, Chris.
Yeah.
And those downtimes are rough.
Yeah.
People in the wealth building community have gone through it. We've all stuck together through it. It's not easy.
Yeah, we've survived and thrived every single bear market since Bitcoin started trading on exchanges. And I can tell you, hindsight is 2020. It's very easy to look back at the past decade plus and say, oh, you guys got lucky, or of course I would have stuck through the bear markets. I can tell you from experience, talking to thousands of people and having onboarded literally millions of people into Bitcoin, that the mass majority of people in bear markets do not survive bear markets. Even the ones that, beat the drum of hodl till you die. That's why what Nikki's talking about, it might sound boring, like, oh, risk tolerance and all that shit, but it actually matters, guys,
It
because
does.
if you can't stomach the downturns and like truly accept the risk, you are much more likely to puke, panic, sell at the lows. And I know a lot of Bitcoin OGs that do exactly that. So that's why, the thing that we beat the drum on so much is managing your positions in a way that you would be okay if Bitcoin went down by 90% and feel like you had enough skin in the game if it went to $1 million tomorrow, right? There's a sweet spot in there for everybody, and it's different for everybody. You have some people on social media that like to brag about the fact that they're 100% Bitcoin and that everybody else should be too. But the reality is, as a Bitcoin bull, I don't think that's true. I don't think everybody should be 100% Bitcoin. I'm not. And you just got to figure out what that percentage is for you. All right, moving on. Next question. We've got a lot to get through. So Raz was asking, what do you guys do to get in the zone for trading or for mental work? Also, what are your favorite methods for sizing up on trades? Talk a little bit about risk management. My biggest hurdle is the inability to size up without risking a big chunk of my pot or my portfolio. Trav, what do you do to get in the zone for making good decisions in the markets?
Lots of coffee, lots and lots of caffeine and stimulants. No, it's a great question. I think deliberately about that enough. Yeah, I think, for me, like the hardest times come when you go through like longer periods of drawdowns. And when that happens, I try to spend a lot more time focused on my investment thesis, looking over more data, looking over more numbers, figuring out bull case and bear case, and looking really at like details, like, so reading through call transcripts and, just again, trying to lose myself in the details of the work and really trying to focus on like the things that ultimately are going to matter in the longer term, and try to focus less on like the price action or what my P&L looks like when I'm in those downturns. Cause it's really about like, okay, how do I position myself to come out of this downturn and gain the most coming out of it? And so that's really when I have to focus most, I think, on the mental. I'm pretty good, I guess, on the greed side when, we're in a euphoria. I've been through enough of those cycles where I'm like, okay, like I've seen this. I've seen the Ciscos, I've seen the NVIDIAs, I've seen the what it looks like on the other side of those parabolas, like too many times. And so thankfully, I think I have a pretty good handle on that. And I would say it's really on the loss side where I have to kind of refocus myself. And again, I think it mostly comes down to focusing on the inputs that I can control. And that helps me a lot.
Well said. Yeah, I think for me, it's all about routine. So like, how do you get in the zone for trading? For me, it's just having a specific routine that I do that gets me in, the right habits of like going through the process of analyzing my open positions, analyzing new opportunities, reading, learning, right? So just having a very simple routine. And then as far as like favorite methods for like sizing up trades, is you've got to have a way to reward yourself for making good decisions and almost punishing yourself for bad decisions. So if you take a no trade or a bad trade that didn't fit your trading plan, maybe it makes sense to size down. Whereas if you reward yourself with consistency, ideally, you're always going to be on the bleeding edge of being uncomfortable with position sizes, right? If you're growing sizes, that means you're risking more than you did in previous trades. And so you've got to do that in a responsible way. Instead of like just leveraging up on some shitcoin exchange and then you get liquidated and you go down this like revenge trading spiral. So for me, it's about rewarding good decisions and punishing bad decisions. Nick, anything to add? Oh, go ahead, Trev.
Oh yeah, I was just gonna say real quick on the sizing part of the question. I try to take as much emotion out of the sizing question as I can. So I really try to focus on percentages for one. Like I always say, first thing is like don't think in dollar amounts because you're gonna have to size up, and so your dollar amounts are naturally going to change as your portfolio grows over time. And so one mistake that people make as they once they get to a larger portfolio size is they start to get too conservative because they're thinking still in the same dollar amount. So I always just say, I just calculate it in percentages, and I'm like, okay, if I want a 5% position size, this is what it means for how many shares or how many dollars I need. And I'm not going to let that, I'm not going to let the dollar amount scare me or change me. This is what the percentage and what my position sizing framework says. So think in percentages. And then also like, I actually have a framework for trying to at least dial in a range of the right position size based on the upside and the downside probabilities that I put down. And so, whether that's, there's different frameworks. I use a modified Kelly criterion framework, but in the community, we cover some of that. In the stock bootcamp, I cover some of that if you're interested in more of the details there. But I think that helps. Like having a framework for your position sizing and then thinking in percentages are two great ways to take the emotion out of sizing up.
Awesome. Nick, anything to add?
We did talk about this on our last Money Mindset meetup where we had our traders, talking through some of the struggles that they have. And one of our traders was talking about sizing up, and he was having a hard time, pressing the button and actually committing to that sizing. And a lot of times that stems from either fear for some reason or not accepting the risk on the trade. So I think that a lot of that you kind of have to figure out what is this hesitation stemming from? Is it basically realistic? Is it something that's truly an issue with fear, or is it an issue with you don't have a strategy that's strong enough to know if a trade is a good trade or a bad trade, and you're afraid to size on it because of that?
Yeah, well said. All right. Mr. Pumpkin was asking, do you believe that the widespread recognition and adoption of cycle top indicators like the Coinbase app ranking in the App Store or celebrity endorsements and anecdotal evidence like Uber drivers talking about Dogecoin, that those top indicators might eventually render themselves ineffective as reliable predictors of market peaks? So yeah, basically like the things that we've seen in the past that have been reliable top indicators, do you think as they become more widely known, will they be less effective? I think yes and no. So like whenever most people agree on something in the market, usually that doesn't actually play out. Take the 100K narrative in Bitcoin from the last market cycle, it became a crowded trade and then it trapped and we had a bear market, right? But there are some things that are just like kind of timeless. Whenever you start to see market sentiment indicators like celebrity endorsements, like the Coinbase app being most downloaded because normies are yeeting into Bitcoin at the top because they saw some news article that said everybody's getting hilariously rich. Like as long as bubbles exist in markets, like those things I think will work. There are like on-chain factors that I think are not as reliable, like mental models, like stock to flow. Like some people look at that as a religion and they're like, oh, the stock to flow model is predicting this price, so price has to go there. Or, certain, just on-chain factors that have worked in prior market cycles, they may or may not work in the future. But one thing that I think is actually more reliable is market sentiment indicators. When you see people just behaving irrationally, I do think that those are things that will just continue to work.
Yeah, we see it on the stock side. Look at a lot of the stuff we've gone through with GME, look at the, even maybe now with NVIDIA to some degree. And so I think as part of a broader set of signals, especially looking at, different fear and greed indicators can be very, very useful, and human emotion over time does not really change.
Yep. So Ginger Adams was asking, after the SEC's 180 on crypto and with global liquidity increasing between now and the US election, are we expecting to see a new all-time high soon? Or the Mt. Gox distributions a risk in the near term? So, two-part question. I'll just say this, that we had a ton of questions come in about Bitcoin's price. So we'll talk a little bit about this and some thoughts, but I'm also going to do a more in-depth video on my channel, Chris Dunn TV, tomorrow or on Friday. So look out for that. But to answer your question about like what the expectations are now, like I think we're still in a bull market, and until I see reasons for that to change, I'm going to stick with price being the driver of my decisions. We can look at things like, global liquidity, right? We can look at things like the election. We can look at all of these things that could be inputs, even the Mt. Gox distributions, which for anybody that doesn't know, Mt. Gox was one of the first exchanges where you could actually trade Bitcoin, and they lost a whole bunch of money. And now they are redistributing, which could be a lot of supply on the market. It's a few billion, that I think could hit the market at $1 trillion+ market cap. Do I think it's going to have a massive impact? I don't think so. So I think when in doubt, instead of trying to look at all these little individual inputs or things that could impact price, just let price action be a guide. And for me, that just keeps it more simple. And price action is truth. And I think right now we're in a bull market until something changes. So, okay, moving on. Next question. With AI and data centers in general starting to locate near nuclear power plants, what do you think of investing in utilities that hold nuclear assets as a long-term play? My best performing stonk over the last 3 years has been CEG. It's a cash flow machine. Yeah, what do you guys think of nuclear power working with AI? I know, was it China or somebody was really starting to accelerate this?
Yeah, so it's a trade that's already kind of playing out, unfortunately. This trade has been a very hot trade for the last 6 to 12 months. The AI demand for power is obviously very significant, and it will actually move the needle on overall demand for power in the United States and certainly in other countries. And the US, unfortunately, is not building more nuclear capacity right now. We last built 2 reactors. There was the Summer plant and then the Vogtle plant. Both of them were cost overrun disasters. And those were in Georgia and South Carolina, respectively. And those were not great. Those were terrible financial results for the project owners, as well as for the utility rate payers, the consumers. They were paying higher rates than they expected to. But there is a lot of bullish potential demand for maybe these smaller nuclear reactors in the decade or two ahead in the US. So things like the NuScale, which unfortunately is a little bit short of capital and has not been a very good stock to own so far. And then there's also Oklo, which just went public via SPAC. It's associated with Sam Altman, but it too doesn't really have a project on the horizon that will get built anytime in the near term. So what a lot of the existing, data center players and even companies like Amazon are doing is they're trying to relocate or build new data centers next to existing nuclear plants. I think there's like 96 nuclear plants still active in the US currently. So you may see some of that. And I don't know that really changes the economics very significantly for the existing utility owners. They may get slightly higher power prices from that, but it's not going to be that large. And we've already seen these stocks go up quite a bit in the last year. So I think this trade theme is a little bit overhyped. I don't think you really necessarily want to own a boring utility just because, power demand is going to grow by 4 or 5% a year for the next few years, given the fact that they're already trading at pretty high multiples now. So there may be some other backdoor ways to play that. We had a stock for solar that was up 50% in the past month. And that's because a lot of the incremental power capacity that can be built in the US quickly is via projects like solar and wind. And so that's maybe one way to play it that still hasn't fully played out. But maybe outside the US, you mentioned China, Chris. China is building incremental nuclear capacity. They've got, I think, 20 or 30 nuclear reactors that should come online in the next decade. I think there's actually several that are coming online this year or next. So there may be some ways to play it outside the US. I'm less familiar with that, so I'd have to do some work on that. But unfortunately, you look at power component stocks as well. Like there's Eaton, there's Vertiv, there's a few stocks like that, again, they're already up like 100, 200% over the past year. So I think the theme has kind of already started to play out. maybe it's got a little room to run still, but overall, I don't think it's that exciting of a way to play it right now.
Yeah, it looks like CEG Constellation is up quite a bit over the past few years. So yeah, I mean, that I think the idea that and the approach that we usually take is looking to get in prior to the trend being overbought and overhyped and kind of late cycle. So I think
Yeah,
that's what you're saying.
I think you just have to be in general, be a little bit cautious here about adding too much exposure to the AI theme. I think we're later in the stages, probably in inning 5 or 6. Granted, again, I think it'll go through the classic hype cycle pattern where we're going to have this, we're in the initial boom and in euphoria phase. That's going to cool off probably sometime in the next 1 to 2 years. And then there's going to be a longer term growth curve that'll be very nice. But I think you have to be very wary of getting too overexposed to this extremely hot theme in the short run, which has already run a lot.
Well said. All right, Nikki, here's one for you. Left Hook was asking, let's say you amass $2 to $3 million this cycle and exit. How would you allocate that to build long-term wealth? What are the most tax-advantaged strategies for that capital? So how would you guys allocate to give yourself the best chance of retirement in under 10 years from there? So let's say, just to kind of simplify this question, let's say, Nikki, somebody made 2 or 3 million bucks in crypto. They pulled it out of crypto. What's a good way to invest that to retire in less than a decade from now?
Yeah, I mean, obviously, this depends big time on many, many different factors. Being 10 years out from retirement, it does give you some time to be in risk assets like stocks. But it's not, like you and I with our longer term investing, we have multi decades, ahead of us to compound. So your strategy is probably going to be a little bit different if your time frame is a little shortened, and also you want to be thinking about capital preservation as well, because you've amassed all this money. You want to balance taking on risk to continue to grow while also preserving the capital so that you don't lose it, especially if your time frame is 10 years before you need the money to retire. So I think that it depends on a lot of things. Obviously, some people are more risk averse than others, and but I'd be looking at I'd be probably looking at the preservation side. How can we capture some income that, fixed income that will help you pay your bills? If that's even something that maybe you have a low cost of living situation, you can set aside a certain amount of that 2 to 3 million to kick off some fixed income that'll help you, pay your bills, and you don't have to worry. And then there's a portion of it that you can take on a bit more risk with for that decade time frame, if you wanted to be invested in some stocks. So
Yeah.
it depends on a lot of different things, but that's just kind of me spitballing some initial thoughts.
And I think a big question would be like, what is their EVP number, right? The escape velocity portfolio number, or is that even close to what they would need? Or like, would this person need way more than 2 or 3 million to be able to comfortably retire and not draw too large of a withdrawal rate on that portfolio? Yeah.
Yeah,
So
like
I think
how
there's,
long how many years are they gonna be in retirement too, right? Like, they're
yeah.
retiring in 10 years, but how long are you taking an early retirement? So, there's just a lot of things that you'd have to know to be able to properly allocate those funds, but
Yeah, in the community, we have a video course that talks about, how to find out what your escape velocity number is and how to plan for that. So, yeah, I mean, this is something that obviously there's a lot of variables, but hey, congratulations on maybe making a few million bucks this cycle. I know,
for
a
sure.
lot of people do that through the bull markets. They amass a big amount and then they're like, okay, what do I do? Do I pull this out and pay taxes? Do I try to lend it and get yield and avoid capital gains? Do I diversify? And I think that's where, Nikki, I know you've helped a lot of people, and yeah, so get with a financial advisor, right? That's why financial
Yeah.
advisors exist.
In a situation like that, it might be helpful to get a second look from a professional that can just make sure you're dotting your I's and crossing your T's properly.
Yep. All right. Todd was asking, is the Bitcoin effect going to help companies pump their stock prices as much now that there are ETFs available to consumers? So basically, I think the question is are Bitcoin related stocks gonna be able to get alpha now that people can just buy ETFs? Trav, is that how you read that?
Yeah, I think so. Like, so we would be talking about stocks like MicroStrategy, Coinbase, some of the crypto miners, and maybe any other companies, Tesla, for instance, when they bought Bitcoin. We've seen stocks like that pump when they add Bitcoin to their balance sheet. And so I don't fully know, to be honest. I do think Todd may be onto something. I think that, he does have a point that with more access within the stock market to crypto, we may see less reaction in the future on some of those stocks. But frankly, we haven't seen it in the past couple of weeks or past couple of months. MicroStrategy, Coinbase, the miners are still moving at multiples of, the change in Bitcoin price on a daily basis. So right now they're still kind of levered plays and they're still reacting. We haven't seen a ton of like new companies adding a ton of Bitcoin to their balance sheet. So I don't know if that is going to be a thing going forward, but I am still seeing reactions on the stock side to Bitcoin proxies. So for now, it's still intact, but I do think Todd may be right and onto something for the longer term.
Cool. All right. With the rise of AI, do you think the markets will become more efficient and we will no longer to be able to make money as traders? Oh, so basically, how will technology and AI impact the markets? And I guess, will it make them more efficient? My thesis has been kind of this, at least for the last decade or more, that yeah, technology and algorithms have absolutely impacted the markets on the short term. That's why I no longer day trade the futures markets. That used to be my go-to thing over a decade ago. But algorithms and technology have impacted those shorter term moves where they've essentially competed out those short term profits. That's why there's no longer like day trading firms on Wall Street anymore. It's all algorithmic trading and PhDs and mathematicians that do that stuff. So will I think AI will make the markets more efficient? I think in some capacity, yeah. But as long as there's humans and uncertainty in the markets, which is I think going to always be present. I think there's going to be dumb money. I think there's going to be emotional reactions. What do you guys think?
Yeah, I've thought about this a lot, and I do think that algorithmic trading definitely eliminates a lot of like shorter term arbitrages and shorter term obvious free money situations. But I do think that they create some distortions in the market as well that create some opportunities for medium and longer term holding periods, because you look at a lot of what works with quant trading, they're very heavy into momentum. They're very heavy into factor-based trading. And so when you have a regime shift, whether it's the macro economy or something in the market that changes significantly, you can see pretty massive changes in sectors of the market on either days or weeks or months when that happens. And it can be very, very dramatic. And so if you can understand, for instance, look at some of the algorithms love buying stocks already up a ton. That's why we're seeing companies like NVIDIA going parabolic and probably ANF and probably stuff like that. And so when you have a good fundamental situation, add on top of that momentum, and typically algorithms will amplify that. But what algorithms don't love, for instance, is like cheap stocks that have been beaten up. And so, today we've got a stock Chewy that's up, almost 30%. And it's probably because like algorithms aren't really trading that stock or involved in that stock. Like I was willing to buy that stock at its all-time low, despite the fact that, it wasn't growing a ton in recent quarters. But I think it got to a value that I liked. I got to a point at which I thought it was a company worth owning for a longer term position. But algos probably, see that as having a low momentum score, so they don't want to own it. And so I do think in that, like those types of situations, you have these longer term distortions that can create opportunities in markets that maybe wouldn't have existed in a market that was fully human dominated. So algorithms make some things tougher and maybe some other types of trades better or easier. That's my personal opinion. But, algorithmic trading firms are very sophisticated. They make a lot of money and they're very good at what they do. So they're going to eliminate some opportunities.
Yeah, technology is definitely not new to impacting the markets. And I don't think AI is going to, in the short term, change much. It might make some algos a little better, but I think the competitive landscape will still be such that you can trade and make money.
And even for just a quick example too, I like, it's funny because like people are now punching in like, what are the 5 best AI stocks to buy, like in Chat GPT. And when I look at what those spit out, like those are still far less accurate than someone like myself that has a lot of experience that can go and knows how to screen for stocks. Like I could turn up 15 or 20 smaller cap or mid cap stocks that are secondary plays on AI, but your Chat GPT is going to spit out the ones that have already, gone up a lot that are obvious winners like NVIDIA and TSM and, those kinds of stocks. And so I think like, as it exists today, like LLMs for stock picking, I think are overhyped. And so there's a lot of opportunity for people with experience and knowledge to still make money, despite the fact that, your chat GPT can spit out 5 stock ideas, very quickly.
Yep, absolutely. All right. How might the outcome of the upcoming presidential election influence market sentiment and regulatory policies around crypto? Do you think a possible bull run might come after this year's election results? I don't really have a strong opinion. I mean, I think if Trump gets in, maybe that'll give crypto investors more confidence. How much more capital will it drive than what's already happening? I don't know. I think the only negative impact would be if the political progress that we've been making over the last month started to 180 again. So, for example, over the past month, we've seen a lot of positive developments in the U.S. And a lot of anti-CBDC sentiment, a lot of pro-Bitcoin sentiment, a lot of trying to pump the brakes on the SEC, things like that. So, as far as it's related to crypto. So I think there's positive momentum. If that shifts again, if Biden gets reelected and then the anti-crypto army comes out of their little hole and starts to gain momentum with people, maybe that could be a negative force. But I just think that Bitcoin is a beast that can't be stopped. And I just think it's going to do what it's going to do no matter who gets elected in November. What do you guys think? Kind of expanding that question into the stock market and maybe just the general economy. Do you guys have any strong opinions on, red versus blue, how that's going to affect the economy?
I'm pretty sure that the data out there shows that it doesn't really, like, people shouldn't be positioning their portfolios because of the election. Granted, there are administrations that have more fiscal spending, which helps drive economic activity or, stimulus, there's things like that. But a lot of times, I think the market's done well either way. So I don't know, Trav, is there any other data that you've seen saying
No,
otherwise?
you're right about the broad stock market returns. They've been pretty good under both types of administrations. There are sectoral differences. So you will see some sectors perform better than others depending on which administration. So obviously, your Biden administration would favor alternative energy and favor, less mergers and acquisitions, and it'll favor certain incumbents in certain industries more than others, whereas a Republican administration would favor, even materials and energy sectors a bit more M&A activity, probably lower tax rates. There will probably be extensions of the tax cuts from a few years ago if the Republicans come back into power. So I think on average, I would say net, a Republican administration will be viewed a little bit more positively by stock investors currently because of what we've seen in terms of the regulation creep from the most recent Democratic administration. So I think the stock market, kind of like what happened in 2016, 2017, when Trump was first elected, there was a positive stock market reaction right after Trump was elected, and that was mostly due to the fact that they were smelling tax cuts coming.
Right.
So that is probably likely to be the case again. I wouldn't expect maybe as big of a gap up, but I do think the market will slightly favor a Republican administration. But I don't think overall on a longer term basis, again, the data shows us it probably doesn't matter too much.
And that's
Just keep investing.
That's a whole nother conversation. The tax cuts expiring in 2026.
Mhm.
So that's a whole nother conversation. But a lot of people are just completely unaware that this is going to happen and their tax bills will go up across the board, generally speaking.
Yep.
Cool. All right, we got a few more questions and then we'll start to wrap it up. What is your take on the ETH ETF, and is it worth deploying capital now if somebody's not in the trade? Well, I can't tell you what to do. This is not financial advice. All I can do is tell you what I'm doing. And I've been in this latest trade since 2K, and I'm still holding the lion's share of the position. I would be interested in future bull market setups if we had more breakouts that came. And as of right now, we are still in bull market price structure. So I don't, I'm not one of these guys that's just like, yeah, randomly buy here. Like, I look for actual trade setups where I can map out my risk to reward. And so that's what I'm doing. And yeah, I would add on future bull market setups, but I've already been in for several months. So Simus was asking, why is there so much of a big gap between what's reported about the economy and how people feel it is in reality? It's reported that it's doing great, but people feel that it's not. I think that's a great question because it's true, right? Like, Nikki, you've been talking about this, how the data and the consumer and like everything, not everything, but a lot of things are still pretty bullish, but the average person is like, man, this sucks. Like, the affordability crisis, everything's expensive. People aren't getting paid as much. Like, what's happening? Why is there a big difference between the reality and what people are feeling?
Well, they call it the vibe session, like the vibes are off. I think Kyla, I don't know if I'm saying her name right, but she termed that. But basically what's happening is it depends who you are and where you came from, right? If you came from 2020 locked in with a mortgage rate under 3%, you're probably not feeling the vibe session as badly as someone who's trying to get into a new house right now. And the affordability is just off the charts and it's just unattainable. So I think that we have pockets of people that are feeling fine and doing well. And the broad data shows that. And then we have this underlying part of the economy where inflation is killing them. Like, going to the grocery store is just absolutely horrible and painful. And everybody feels the increase in prices. Like, Trav and I were talking about this yesterday on our macro class that we did for the wealth building community members, how from 2010 to 2020, inflation wasn't even a conversation. It wasn't even a discussion. Nobody cared about it. Nobody looked at it. We didn't care because it wasn't an issue. And now all of a sudden, everybody's talking about inflation. Everybody feels inflation, knows what it is. And so I just think that a lot of people, yes, the general data is okay, but there are cracks happening under the surface. Like, if you look at the small business data, the optimism index, and looking at the actual survey of small businesses, it's actually not great looking. The optimism is at recessionary lows. They can't find people to work in their businesses. That's the biggest complaint these small businesses are having. Their costs have gone up, their profits have gone down. And a lot of that is to do with inflation and just how this job market has shifted so drastically. So I think it depends on what pocket you're looking at, but that's why it's like a vibe session right now. Some people are feeling fine and others are not, and it just really depends on the situation. But the data overall broadly is not terrible in certain spots.
Yeah. Colin had a great tweet. Colin Roche had a great tweet on this yesterday. He said, basically said that, the cumulative inflation in like necessities like food, shelter, and transportation costs have gone up quite a bit over the past 3 years. Mm-hmm. And so even though inflation is still on a cooling path in most countries, like the cumulative inflation, particularly in those necessities category, particularly in, food and transportation, things like that, has gone up so much. And so people's real spending power has gone down, and that, affects almost everyone, even though everyone, for the most part, what we have like a 4% or less unemployment rate. So most people still have their jobs and still have income. Their actual like day-to-day spending power has gone down over the past couple of years. And so that tends to make people not feel great.
Yeah.
Yep. Yeah. It's funny, right? Not funny, but it's interesting that, all the metrics, the official metrics are like, yeah, things are okay. But
Yeah.
yeah, people have gotten squeezed. And that's where the whole idea of like inflation as a secret hidden tax is very real. And for the most part, at least our generation, anybody under the age of like 45, we've been in a falling interest rate, very low inflation environment for pretty much our whole lives. And this is the first time that millennials and Gen Z are feeling any inflation pressure. And it's very real. It's like, look at all the videos from people that are at the grocery store saying, hey, my average spend used to be X, now it's Y. And, yeah, you've got stupid car prices. You've got real estate that's still at all-time highs, even though interest rates are higher. So people are feeling the squeeze.
Unless you're swimming in the equity, on the flip side of that, right? So I don't know. It's a challenging environment for sure.
Yep. All right, let's do a couple more and then we'll wrap it up here. Trav, these are mostly for you. So any updates on like Chinese stocks? Anything on JWN? And also, let's see, do you ever swing trade long overvalued expensive stocks just because of technicals? Like basically, will you ignore fundamentals? So Chinese stocks, and will you ignore fundamentals and just trade based off of momentum?
No, that's me. I'm the degenerate on that front.
Yeah, that on that last question, I have tried to incorporate more opportunistic trading in the past couple of years, and I'm still kind of shifting that over time. And I'm never going to become like a purely non-fundamental trader, but I like to take some opportunities here and there where I think there could be something interesting that's non-fundamental, or that's a combination of fundamental plus technical. And so we've taken a couple of those in the community in the past, and so that's where Nikki and I will team up, and we've had some fun trades through that. But yeah, as far as the other questions, yeah. So the Chinese stocks, I think, are still in an interesting spot. A couple of weeks ago, they were rising pretty quickly. They were outperforming the Nasdaq by 2-1 for year to date, so it was looking pretty good. And then we've seen a big pullback in Alibaba and JD and Baidu and some of the other Chinese stocks just in the past 7 to 10 days. A big reason for that is because Alibaba and JD, they have issued several $1 billion each worth of convertible debt. Now, the funny thing is they issued that convertible debt with the sole purpose of doing share buybacks. And so the idea is that they issue this convertible debt and use that capital from that convertible debt to buy back shares on the US market. I think it was confusing and spooked some investors because they said, why are these companies which have cash-rich balance sheets having to take out debt to enact these repurchases? One big reason for that is a lot of their cash is stranded in China, and there's capital controls in China. And so they can't just easily move out a lot of the cash on their balance sheet to the US to buy the US based shares. So what they did was pretty smart. They said, hey, we can take on very, very cheap debt that doesn't convert into shares until the shares are 30 to 40% higher. And we'll buy back the shares, which we think are really cheap right now at current levels. And so I think that's actually a pretty smart strategy. We've also seen companies like Apple and Microsoft, which are cash-rich companies. We've seen them do that in the past to pretty good effect. So I think we'll see. I think later this summer, we should hopefully see a resurgence of the Chinese stock trade, and I'm still bullish. Those stocks still trade at one half to 1/3 the valuation of their U.S. tech counterparts. So a lot of these stocks are trading 8 to 10 times earnings and are still growing at pretty decent rates. And so I think they're in a pretty good spot. Now, again, I'll say, not financial advice. Chinese stocks have high risk given the heightened US-China tensions. And so you have to size them, I think, properly to account for that risk. But I am still bullish on my Chinese stocks this year. We'll see.
Nice.
Yeah.
All right. Final question. I know we've done a ton of questions so far. This is the last one, and then we'll wrap it up. What are your favorite cash flowing assets? What is a good place to start if you haven't reached escape velocity yet? So I think maybe a better way to ask this or maybe answer it is like, what is something that can give a return? Because, cash flow can come in the form of different things, right? You can have real estate where you literally get cash flow. You could also have stocks which appreciate and maybe kick off a dividend yield. Nikki, I know you did a video on like the myths around like dividend stocks. Some people love dividend stocks and they just want to own it because it pays a dividend yield, but maybe those aren't actually the best stocks to own. So yeah, I don't know what's a good place to start if you haven't hit escape velocity. I'm looking just basically for things that are going to have great risk adjusted returns. That's why I have a large percentage of my portfolio in Bitcoin. Also have a lot of individual stocks and stock indices. How would you guys frame that?
Yeah, I mean, you said it, Chris. You're really, your total return is going to be the cash flow that something kicks off plus the appreciation, whether that's property or stocks or crypto or anything else. You basically want to consider your total return. And so when it comes to building a portfolio, you're obviously looking at you want to find the stuff that has the best risk adjusted returns. And then, as far as if you're not at escape velocity and you're trying to build that portfolio, another thing you obviously want to do is try to inject contributions to the portfolio. So anything you can do to raise your income level or to raise the amount that you can contribute to that portfolio as you build it, that just juices it so much more. So if you can contribute on a monthly, quarterly, yearly basis to that portfolio as you're also allocating investments that are earning high total returns, then it's just that dual tailwind. And that's the perfect way to build that nest egg, to build that escape velocity portfolio, is both the income side and the investment selection side.
Definitely.
I would also, go ahead, Trev.
Oh, sorry. And yeah, just real quickly. I mean, I think we've talked in the past about, just looking historically, like the asset classes that have tended to be, best have been real estate, stocks, and crypto over the past, decade or so. So there also are times where things like precious metals may also play a role and can play a role in helping diversify the portfolio as well. Those have a little bit lower total returns over time, but yeah, real estate, stocks, and crypto would probably be my three favorites.
I was going to say, I think people focus a lot on cash flow, but really they should be focusing on returns. Some people, retirees, should be focused on probably cash flow, but people that are younger, that, they might be able to take an approach that's more of a growth approach. Maybe things aren't kicking off cash flow for you, but the expected returns over time are expected to be higher than an asset that would be kicking off, cash flow. So that's just maybe a different way to frame it. Like, do you need something kicking off cash or not, like fixed income or cash flow? Or can you go more of a growth approach and focus more on total returns, going forward versus cash being paid out to you today?
Yeah. And the other thing that I think Trav alluded to as well is like focusing on income to feed the wealth machine, right? And this is what I built out for the community. I also did a YouTube video talking about my perpetual wealth building machine, and like the more cash flow that you can put into your active and passive investing, the better, or I guess the faster your overall net worth is going to grow, right? So it's like the more capital injections you have, and if you can spend a lot of your time maybe building a business and taking some capital and putting that to work in your own business, that may be the place that you get the highest like actual return that you can put into your investments that are more passive. So that's where I know we focus a lot. Most of our time is actually on like hustle income that we can use as fuel for our wealth building machine. So, all right. Well, we are going for over an hour today. So this is a little bit of a longer show. Guys, what are you looking forward to over the next week? What should people be watching out for? I know for me on the crypto side, just still watching this all-time high consolidation point. And that's basically it. Just looking for trade setups. How about you guys?
Yeah, looking always for stock ideas. Been working on a couple of new ones for the community and for myself. We've got Costco reporting earnings tomorrow, trading at its highest valuation ever, 50 times earnings. I don't know why people are paying 50 times earnings for Costco, but we'll see how that one goes. That'll be an interesting one to watch how the stock reacts. We've got a Euro Central Bank meeting next week. So we'll see if they actually end up lowering rates. One of the first central banks potentially to do that. And yeah, other than that, just taking whatever opportunities come our way in the market.
Awesome. Nikki, any final words?
I am just looking to see if this market is going to correct or not. It's just, I guess I'm getting that feeling, that spidey sense that like we could start to see the market roll over a little bit and get a little tired.
Mhm.
So I just want to be aware of that and prepared for that.
Yep.
Cool.
We have had yields creeping up globally. Actually, we've had the Japanese 10-year yield, the US 10-year yield, some of the 10-year yields in Europe going up at a pretty rapid rate the past week or 2 weeks. So that's something to keep an eye on, Nick. I think your spidey senses are tingling for a reason. So we'll keep an eye
Mhm.
there.
Price action is slowing down a little bit, so I'm like,
Mm-hmm.
And earnings is basically over. So
Mm-hmm.
we'll see.
All right. All right, guys. Well, thanks for listening or watching. Make sure to subscribe to the YouTube channel. Leave us a review on your favorite podcasting platform. Go to wetalkmoney.com/community to check out the wealth building community. And we will see you guys next week. Take care.
See ya.
Cheers.